Okay, so I know I have just released my month 5 week 1 recap, and that was kind of the video for today for you guys, but I saw RNVA and something just clicked, and I had this momentum moment where I was like, oh my god, I've had a great idea for a new set of videos. So I'm just going to run it with you, and the idea is that like I have learned so much. I mean, obviously I've learned so, like my winning percentage is now in the 60s. It closed out in the high 40s, and I was only winning 10% of the time. So I want to show you how I got better. And obviously watching the webinars on the challenge helps immensely. And Tim Sykes has been there for us and supported me, so that helped a lot as well. And it still helps, he still does help. And the video lessons are very cool, but there's also another element, and I get this from Stocks to Trade. And it's basically like, you guys have seen how I look at set up the screen as there's a whole video on it. So I'll click this previous day button down here, and so I can then look at the previous days. And what I'm going to do, and what I might do if you guys like it, is I will run through the hottest stock of the day, and I will talk you through how you could have potentially traded it successfully, because that's what I always think. How could I have made money on the stock? So I'll look at the previous day gainer. I'll run the scan. I see that RNVA was the top winner, 43% there. I look at RNVA. I think, is this a chart that I would have traded in the past? And I've got to say that doing this through Stocks to Trade and using the annotation, I'll talk you through it. It has helped me immensely. And I think you've got to do more than just passively watch the video lessons and the webinars. You've got to actively engage your brain in and think and analyzing how you would make the trade. And this is what I'm going to talk you through how to do now. So yeah, would I trade RNVA? Yes. Why would I trade it? Because it's had this green day and this green day and this green day. It has the potential of running and kind of holding its spikes. I know this is a bit of a top high-end wick, but nevertheless, look where it gapped up to. And although it is a downtrending chart, it still shows strength and volume. So then when I see this day here, if we just look at maybe the last 2 months, we can see that, I mean, it's ran, closed high, and then it's running again. And you think, well, is it going to do what it did the last time, which is what I've just shown you? And potentially, honestly, this stock closed near its highs. It's had much more volume than it's had in previous months. It's got a shot of running again tomorrow, and that on Monday. But let me just talk you through the step-by-step. And honestly, I've learned so much. So what I do is I try not to look at the chart. I see what the biggest percent gain is. I try not look at the chart, and then I scroll in as fast as I can, and I zoom to the end of the day. And then I'm just going to talk you through how you could potentially play this in real time. And Stocks to Trade is cool because you've got the annotation feature, but you've also got the ability to, it's clean software where you can actually see what you're doing it's a sexy way. I mean, it's funny because I think if I was going to buy a phone, I'm sorry, I'm going to buy an iPhone. Or if I'm going to have a car, I'm going to have a Ferrari. If I'm going to trade stocks, I'm going to use Stocks to Trade. I want the best shit because trading's too hard, so I want the best shit to learn from. But anyway, let's run through it. I'm rambling weirdly. Okay, so we know that this stock has got a history of running, okay? Opens up, this stock would not even be on my radar, I don't think, because it hasn't gapped up enough pre-market. So this stock, let's say it's not even on my radar. But as it spins around here, I mean, you've got, this means nothing. It's dropped down, it's profit taken in the morning. Then it drops down a little bit more. It's panicky, but you can't dip buy because you don't know there's no bottom. Where is it going to drop to? Then you have this curl in action. Then a bit more. Now it's really tightening up this candle, so it looks like it's gearing up to. It could be a little bit of push, or it could drop. You don't know. This is not a buy situation. For me, I'm just telling you what I would do. We have more push, more consistent green candles, green volume, and then when it breaks the high of day, you're thinking, great, if it can hold the high of day break now, I'm in. And normally I will always wait for a pullback. So if it goes from the 190s to the 210s, I'm thinking I want a 50% retracement. So I want it to come down to the 190s. But it doesn't. It has another green candle, spikes straight back up. And I think, right, if you wanted to take, I mean, it's not a perfect entry, but it has just broke high of day. You get a lot of momentum buys buying the high of day break. If you can get in somewhere around the wick, around 206, 207, say, great, it's not a bad entry. Personally, I like to buy the pullbacks. I've got a rule to buy the pullbacks, but I'm considering more and more trying to just get a good entry as it breaks high of day if it's a good long-term setup. And then boom, you're away, okay? This is a potential entry. I would not really be wanting to get in here because it's gone from the 195s to the 225s. I always think I'd rather be in safe than get in too high. You don't lose money by not being in a trade, but you you do lose money by getting a bad entry. So I would think this is maybe not enough of a pullback. I'd like to see it maybe come down to the 210s and I'd feel a bit safer. And then it does come down to the 210s. So you can possibly get on this green candle. I think it's not too bad an entry. And then it tightens up and boom, you're away again. This is the second entry. If I was buying pre-high day break, 206, I'd be out in the 230s. I'd just be like, this is insane volume. But another good thing to notice here is we have like 60,000 shares traded, okay, in 1 minute. And it's shot up from the 216s to the 230s. Now, if you see a stock trade 60,000 shares, have its biggest volume, but it doesn't have much of a green candle, that means that it's stuffing and everybody's selling into the spike. And there's more sellers than buyers, and it's inevitably going to struggle or it's going to go down. With this volume and this push, you can see, shit, this has got a chance of really running. So that's a strong indication for you. I'd be out here if I was buying the pre-high. If I was buying here, I'd try and ride it once more. You've also got to think 3 pullbacks and it's normally dead. So this is the first pullback. This is the second pullback. And then it continues to run. This is a heavy pullback. For me, I think that's slapped back too hard. Now there's a lot of sellers. So now I'm getting out on the next green candle. So I'd be out here no matter what. So if I was buying this pullback here, if my entry was the 212s, I'd be waiting for it to bounce a little bit. I'd be out in the 230s. So it's like a maybe 5, 10, 6, 7% win. But again, this green candle doesn't break that red candle. So you think it looks like it could be in a bit of trouble. But it turns out it's a bit of consolidation and it goes on to run massively again. I would rather be safe than sorry, okay? I still took profits. I still took the meat of the move. But I think that you're risking a bit here. And also, the way you can look at it is you've got this solid trend line. So you could say as long as it doesn't break the AMAs, as long as it doesn't break the trend line, I mean, you can hold this for a lot longer all the way up. And it turns out that you've got this crazy run. But again, when it has this blow off top off the AMAs, you want to be out as well. Some people would argue if you can follow the trend line all the way up and don't get out until the 3s, that's another way to play it. It's just not my style. I like to take profits. I like to have green trades. But let's just look at it in a bit more depth. I'll show you the whole thing. And this is how I've annotated the chart. So we've got the 200-day moving average, the 50-day moving average. We've got trend lines all over this thing. I'm so excited to see how this behaves tomorrow. So you can put a trend line on and map it all the way up, but you've got your first pullback, your second pullback, your third pullback here, bit of consolidation before it ramps up again, fourth pullback. When it slaps back hard here, it's time to get out. I mean, fair enough, it has one final run, but I mean, I wouldn't be in this. I'd definitely be out selling into strength here. And then you can see it comes back down to the 70s, bounces, finds support in the 275s, it holds at its highs all day. So if this kind of gaps up back towards the 3 areas, I'd be buying it, risking off 3, I think, tomorrow. And that's pretty much a wrap. If you like these kind of videos, if you kind of learn from the minute-by-minute analysis, because I think that's sometimes what you don't see. Like with the recaps, you can be like, oh, you can buy here, you can buy here. But what you don't see is this minute-by-minute analysis. And you guys should do the same on stocks to trade, I think, because this is what I've learned a lot from. I think, would I buy now, would I not buy? And then I find out, was I right, was I wrong? And it's real-time learning on the hottest stocks. So that's a quick little lesson. I hope you guys like it. Otherwise, from now, hasta luego. I'll see you later. And this is RNVA.